That way, those of you who might not be here for this will have access to it later. Okay, and then I think this will help a lot as far as being able to take advantage of the room. And this is the reason that I wanted to do it also earlier in the week, is so that for those of you looking to follow along with the plays that Sammy and I take, can do it correctly. Okay, so that's why I kind of wanted to do it earlier in the week. Okay. Okay, so we'll just take a second and get through the disclosures. Okay, so that as you know, trading can be risky, and this is meant for education specifically. Okay. All right. So let's talk a little bit about order execution. Okay. So the problem, and I've seen people echo this in the room a little bit. Fills can be an issue, or sometimes you might wonder why am I not getting filled on a play, or why did I get filled where I did on a play, right? Things like that. Okay, so we want to make sure that we are going after things that are liquid, that we actually can play, because you don't want to be wasting time watching something that's hard to borrow, none to borrow, and missing other opportunities. And just because, this wasn't really available to you in the first place. Okay, things like that. And then, like I said, how to kind of follow along with the right order types. Okay. All right. So when you see a play posted, this is actually yesterday's TCO, for example. Okay. Give you the short entry and the stop and the targets. Okay. This is what you should be putting in to your platform. Okay. So on the TCO yesterday, I saw 2-cent spread at times. I think the widest I saw was 5 cents. Okay. So I'm going to take that into account when I'm putting in my order. Okay. So some of you actually may have put in the order at 29.44, which is fine. I put it at 29.43 because I did see a couple cents spread, and I gave it to 29.40 to fill me. I didn't have any issue getting filled. I got filled right at 29.43, which is good. Okay, I didn't have any issue getting filled late or anything like that. It wasn't on an uptick, which was good. We'll talk about the uptick a little bit more later. Okay, and so on something like this, right, a little bit of spread, I'm going to give it as the stop as 43. Okay, now that 2 cents that I'm giving it is also going to go with the stop. Now the stop, I'm also using a stop limit here as well. Okay, so that if it breaks above or prints 63, I'm going to get filled. Okay, and I want to be filled somewhere in here. There's been a couple occasions where something did take out the stop and actually exceeded the limit, and I didn't get filled. In every single one of those instances, I got filled as it came back down. I want to give it more room on the limit on the way out. Okay, because if, let's say, this thing dropped really hard. It did drop with a good amount of volume yesterday, but let's say it drops to 29.35. Like right away, and I'm not filled yet. There's only going to be 10 cents left to target, and I'm playing with now something like a 30-cent stop. So that is exactly why. It's a really good question, J&J. That is why I don't use stop market. Because in the instances where I give it a wide limit, you can even give it a wider limit than this. So this is like about twice the spread that I'm seeing. So for the stop limit on the way in, I give it about the most spread that I've seen. And then here I give it about twice the spread. Because it's happened a couple times, even on official plays. You guys have been with me. I remember one of them was the fast, and they had like an earnings call, and it immediately dropped. And then immediately dropped, took out our stop. It dropped really hard, and then came right back up. They typically bounce back. Now, when that happens, that's when, and say you don't get filled, I'm sure eventually it will happen to me where I don't get filled and it keeps on going. Then you do have to do it manually. But in every instance that I've had where it actually exceeded the limit on the stop, it bounced right back and I got out. So I didn't end up taking 1.5 or 2 hour loss which I would have taken if I had a stop market. So yeah, I do want to give it more limit. So you're absolutely right. That's why I give it more room, because I do want to get out. If it's not working, I just want to get out. But in every instance where I've had it like actually exceed the limit, it came right back and got me filled. Because the problem is on those, you don't want to be doing market, because it's going to give it to you at the top. It's going to give you at the worst spot, right? Because yeah, we're not going to get any kind of priority typically on those spikes. And whatever, majority of the time that's not going to happen, where you get some really bad stop out. Yeah. It is. On those big spikes, they're always going to work against you. You're always going to get filled at the worst. So yeah, that's why I use the limit. Now, and so I use limit for both, but on the way in, it's because I don't want to be in a play where the reward to risk no longer makes sense. And then on the way out, it's so that I don't get filled at the worst spot. And then if it doesn't fill me, then I have to do it manually. That's fine. Okay, but yeah, when this happens, you do want to be looking to, so I use OCO. That's right. As soon as I get triggered into this TCO play, it automatically does this and this, okay, which is the target. So it'll usually put in a limit order, and then I'll cut it to half, because I'm usually looking to take it in portions. Okay. So if you were to prioritize one of these orders, you don't want to do OCO or whatever, you're doing it manually, or maybe your platform, you're not as familiar or doesn't allow it, whatever the reason is, definitely have your stop. Okay. If you can only have one, but most platforms should have this, no problem. Some of them you can just put in this one afterwards and then link them so that it's OCO. But I always do it OCO. Because I mean, even sometimes, I've been on the mic and I need to like update a play, but I'm doing something like this. It definitely happened a couple open houses ago. I was in this, I totally forgot to trail something, right? So as you can imagine, sometimes we get distracted or we've got other plays going on. So you want to have this kind of taken care of as much as possible, right? And especially if you're the type, which I used to be, where, when I'm in a play, I just watch it like a hawk, and I'm also staring at my P&L at the same time, right? And doing that, and then I would constantly get out too early. Like as soon as something goes up, I'm in profit, and I see that profit start to evaporate just a little bit, I'd want to jump out. So doing the OCO orders really helps, because if it's not at target and it's not at the stop, I don't have any means to trail according to my plan, then I can just, for the most part, ignore it. That's a pretty good thing to consider too if you want to use mental stops, which is essentially you have an area where if it gets to that area, you want to get out, but you maybe don't want to get out to the penny quite yet. You want to see if you get a reaction from that area. That's fine. But what I've found is that if my play was going to stop, it's usually not because I'm going to get shaken out. It's because it's actually not going to work. Okay, so if you find that you're getting shaken out a lot, then you want to use more mental stops. You just want to be careful, and you're mentioning that, the people who use it are more experienced. You just want to make sure that you don't start to hesitate and then don't take the stop, and then it continues to be a bigger loss, and then you think, oh, I already missed my exit, so I'm just going to hold and wait. If you're sure that you can trust yourself to be disciplined, then you can use a mental stop. But it becomes a slippery slope where if you don't take it and it continues to get a bigger loss, you think, well, I already missed the exit. Maybe I'll just wait till it comes back. And then you're just doing an exercise in how much pain you can take. And if you're going to do it that way, you're definitely not going to last, because it's going to wear you out day to day as a trader. So for me, it's just easier to do it that way. I've never really had a problem with taking stops, but it's just, one thing less that I have to monitor, right? So that's something to consider, whether it's better for you or for not. This is the way that I do it, and I think this is also the way that I would recommend people in the room to do it, okay, is to use stop limits. Keep them in the system. If you find out that you get shaken out a lot, then you can first consider maybe giving it more room. Like, see, in this example, right, I don't put it at 62. I don't put it at 61, right? Give it a couple cents, right? So That's funny, Tom. Oh my gosh, I can't tell you. There are a couple people I've worked with in coaching who, when the day trade stops out, they start to look for reasons it should be a swing trade. And unfortunately, I don't think they are trading anymore. So it's hard. It's a hard habit to break. And I know exactly why I think it's so hard to break is because you get away with it. Maybe half the time, maybe more. Especially if you trade really liquid things. A lot of times they will kind of come back. You may get an okay exit. But that one that doesn't work, that wipes out maybe a week's worth, could ruin a whole month, then that's when you tell yourself, I'm never going to do it again. Right? Until you do, you get away with it. Maybe you get back, you get out break even, and then you start to reinforce it again until the next big disaster. It only takes one. That's the big problem, right? So, all right. So same thing here on a long plate. Now this one, the SYMC, didn't have any spread. So you can see the orders are a little bit tighter here, right? If the entry is over 96, I put the stop at 97, give it 5 cents to fill. And then you can see here, I gave it 9 cents. Again, more room on the stop to get out because I do want to get out if it's going to stop. But on the way in, I also don't want to get into a play where there's no reward to risk anymore. Okay? And that's happened. Sometimes I call a play and, calling a play probably makes it even harder for me to get filled. So I definitely had times where, someone, messaged me later and was like, oh, didn't you have a really nice day? Wasn't that really nice? And I say, well, I didn't even get filled on it. So, it's maybe some people did, but, so it's going to happen too, where it just puts in a huge green bar, skips a bunch of orders, and I don't even get to be a part of it, but that's fine. I could always look for another entry, right? All right, so let's take a look at spread. And so hopefully you guys can make this a habit as well. A lot of times when I see a setup, I see a play, I want to go next to assess the spread to see, is it going to be playable? Okay, and so like something like this, which has like a really nice drop. I mean, you can see that this went a little bit climactic, but did a sell setup. Those of you who, know what the patterns are, this is not a bad play. But look at this spread, right? So that means, let's say I tried to short this, right? I'm going to be getting filled at 36. If I played this and I see this thing drop to 28.39, I'm probably going to be getting filled around 28.59, somewhere in between, right? And so spread is an issue. I've heard other people say spread's not a factor, and I just don't understand how that could be. Because spread determines where you get in and where you get out. There's nothing else more important than trading. The price that you get in and the price that you get out. I don't know what else is more important in trading. So spread definitely has to be assessed. I would definitely have to take a look at it. And so on something like this is really going to cut into your reward to risk, right? There have been times where I took a play, it was too spready, I got filled late, and it got to target, but I'm really not up that much. So I said, I don't want to take it. Next thing I know, play is going the other way because it already got to target, and I take a loss. And it's like, well, I took a play, and it got to target. The only reason I'm taking a loss here is because it wasn't really up that much due to the spread, and now I'm taking a loss. So spread absolutely can have an impact on your trades. That's why, at the open, right, I don't want to be too aggressive on spready things, right? So, and then as you can imagine, if it works against you, right, then the spread becomes an even bigger problem. You're going to be taking bigger losses than you anticipated. Okay, I know someone mentioned yesterday that they were excited to see kind of what the imbalance looks like, okay? And so this is an example here. Now, with these trades, I got a question, I think just a couple weeks ago, how often do I play these? Maybe like once a quarter right now. And I never play them when it's just the level 2. It has to have a setup. So you can see here on this XOG, it was a gap down. Okay, so it wasn't just that, I found this. It was that it was a gap down, and then it was setting up a penny base. Okay, look at how stacked the shares on the ask are and how small the shares on the bid are. So that is going to stand out right away. If we look at this previous example, the imbalance here isn't really there. And you can see there's more people on the ask, there's less people on the bid, it's a bearish stock, so that kind of lines up. But it's not skewed like it is here, right? Thousands and thousands more shares to here. Now, there's a couple things you want to watch for when you come across this. You want to make sure that it stays this way. It doesn't flip-flop, okay? And as it starts to move, that imbalance is staying there. So I think what happened here, the reason that I don't have the move in between here is because as soon as it dropped and then paused here. So like it chewed through 05 so fast that I couldn't get a picture of it. Okay, and then it paused here for a little bit. Okay, so this, even if let's say you tried to get it here, you couldn't get filled, here is still okay. You can still play it. Now you want to make sure that this imbalance stays, and you want to make sure that the spread doesn't change. If the spread starts to open up, right, say it starts to become 2, 3, or more cents, the play is not as good as anymore. Because what you're looking to do is, because you're only looking for pennies, is to play it with bigger size, right? Sammy also has videos on this that you can check out, scalping the level 2, okay? But this, I felt, goes into when we assess spread, because these are kind of the things that we can take away from the level 2. All right, so again, and then it's going to drop again. You can see a lot more shares on the ask, barely anything on the bid. Nobody's really looking to support this, to buy this, right? And so lower, lower, lower. As soon as you start to see the bid strengthen is when you want to be getting out, okay? So because typically, let's say you trail it to like 902 here, right? It's going to pop. A lot of times it's going to, when this does pop, it's going to hit at 902, but you might not get filled till 903. And then, you know, there goes all the kind of profit that you had. Okay, so these, I remember this one, and I thought it acted kind of perfectly for what we want to be seeing on the level 2. Okay, we just unfortunately don't see him that often. I think I mentioned to you yesterday, I talked to a guy on Friday who called me because he was looking for kind of new strategies, because the people at his prop firm were finding that this level 2 imbalance trade was not happening. Just was so infrequent at this point that he wanted to see what else they could do. Okay, so just keep that in mind. As exciting as it is, and I know some of you guys can make a lot on it, it's unfortunately not as frequent as we would like. All right, some terminology here. Okay, just to get through with it, I think everyone should know, every day trader should be aware of. All right, hard to borrow, but potentially can be located. Depends on your platform, right? Depends on your broker. Okay, how to go about doing that and what the cost will be. Okay, and then none to borrow. Don't even bother. There's the broker or the clearing firm doesn't have anything for you to borrow. Okay, and so yeah, those you just don't even want to put them on charts. Just like don't even waste screen space for them because they're not available. You can always also, if you constantly notice that the things that you like are constantly hard to borrow and none to borrow, you could always also look to see which brokers have a better list to borrow. I watch on the ladder. I watch on the level 2. I do have the ladder open, but I really don't watch it. So it should show up at the level 2. Probably if I spent more time looking at the ladder, maybe I'd be familiar with it. I mean, they're not that different. I think they serve to do kind of show you the same thing. But the level 2 focuses on marketable orders right now. So I would probably lean more towards that. Yeah, the ladder I think he's talking about is the active trader ladder for Thinkorswim specifically. So I think that's what he means. Yeah. Yeah. Okay. So, and then the uptick rule. Okay, so the uptick rule is in effect when a stock decreases by 10% or more from the previous day's close. And then it's going to be in place until the close of the next day. Okay, so something goes on an uptick today, right? It's still going to be on an uptick tomorrow until tomorrow's close. And in those instances, you can't get filled unless on an uptick. Now, it could be like 0.005 You could get filled like on half a penny uptick sometimes. Okay, but just know, because we've had that happen. We want to play a breakdown, and then we're wondering why we're not getting filled, or we're getting filled late. It's because, and so I generally don't like it, but a lot of times it's the best of what's out there, or something that's on an uptick, right? But the reason I don't like it is because you have to get filled when it's kind of moving the other way, right? And so sometimes it does push us to change our behavior a little bit, where normally a play breaks down, we can't get it, but you kind of have to let it work its way, possibly let it get filled on the way back up. So, and it never feels good if it triggers, you don't get filled, it moves up, and then you do get filled on the way up, and then it just keeps on going, right? And you get stopped out or something, right? So, generally, I try to treat the uptick rule as I would any other play that I'm going to short, but it does sometimes cause a delay in getting filled. Also forces me to kind of have to question, how late am I willing to get filled? How patient am I willing to be? Whereas, for a long, it's not going to be an issue, right? Unless something's like really spready or popped really hard initially and you're going to wait for the pullback. Seldom on a long is it going to be an issue. I don't use any other kind of level 2 besides the Thinkorswim one. So, for what I use level 2 is, most often it's going to be to look at the spread. Like I said, maybe once a quarter I'll do one of these, but most of the time I just want to see what the spread is. Okay, you can also use time and sales, kind of see how people are getting filled as well. But usually I find that this is good enough. Yeah, so I'll just use this. So I think maybe if I was like doing more plays, like based on the tape, I would look into some other service that gave more kind of data on that. But just because it's not that important to the trade itself. It's important to the fills for me on the level 2. But as far as like whether I choose to play long or short, or where my entry price is going to be, it doesn't really make that much of an impact. Okay, so I don't know. Someone may be able to give you kind of an opinion on that, but not. I just used the level 2 that's in the platform. Okay. All right, so that's HTB, NTB, and the uptick. Okay, so just to summarize, all right, I'm using stop limit for the entries and for using my stop price. You can use limit orders for your targets. You can also trail. That's usually what we do, is trail. But, if you want to just put the limit in the system and maybe you got to take care of something else, right? That's always there for you. Like I said, do trigger with bracket if you're using Thinkorswim. That's what I use. That way it's kind of taken care of for me for the most part. Okay, and then stop market can be used when trailing, or maybe, you want to get out manually. Okay, level 2, like I said, the primary usage for me is for assessing spread. Of course, if we see more level 2 trades, of course, we'll start to take them, just don't see them all that much. Okay, and what we're identifying there when we see all those shares stacked on the ask is that there is an imbalance between demand and supply. All right, and then just know how hard to borrow, none to borrow, and the uptick are going to affect your fills or your lack of fills, right? That's a really good point. And, this actually is straight out of the Turnaround Trader Formula. It's a program that I created that some of you have taken. And it's actually, I mentioned that. That's funny. I actually mentioned that in the original recording of this, is that a lot of times I'm identifying, right, an area. Just go back and look at the TCO, right? Where did we got in? A lot of times we're identifying a place where there's support or resistance. So when it does break, we often see the volatility increase. And so that's why I'm also giving it like all the way to 40 to fill me. So that's absolutely true, that I am focusing on a level which, if it breaks, should be eventful. And it's the same thing with the stop here. It's just I have more urgency and more need to get out, so I'm giving it a wider limit. But that's the reason I'm not just saying stop 43 and limit 42. Even though at the time that it breaks, that's kind of what I'm expecting the bid and the ask to look like. But I'm giving it extra room to fill me, same long or short, extra room to fill me, because I'm expecting at the time of the trigger that something eventful is happening. So it is taken into consideration. Absolutely. Especially, yeah, breakout plays, absolutely. Right. Very, very good point. Very, very good point. So thanks for mentioning that. I'm glad that you did. The subscription services, I don't really have much to add on that, Pedro, unfortunately. So I think talk to the platform people who you're subscribing the data for. Yeah. So I don't have anything for you there. Okay. Any questions on that? Okay, I just wanted to get that out of the way. I think that should help people, at least for the next few days, for the rest of the week, be able to follow along a little bit better. And just know kind of how Sammy and I and James are executing our orders. Okay? And then what is the thinking behind them? Why do we do it this way? Right? Okay? Because I think it can sometimes, easy to take it for granted. Good question, John. Mark. I do mark. So I do actually want that price to have been printed. I have tried to use, based on what's on the ask in the past, and found that I've gotten in or out earlier than I wanted, because that price didn't, while that may have been the relevant price on the level 2 at that time, or at some point, business wasn't actually done at that price. I don't want to be getting executed on those. So I've generally found when using the ask as the stop, I got in or out earlier than I wanted to. So mark means that it actually, an order was filled at that price. So some business between a buyer and seller actually was executed and shares were exchanged at that price. So that's what mark. Ask is just referring to who's on the level 2. Or yeah, who's on the ask. Okay. So for instance, yeah, if I put a buy order for 901 on the ask, I would get filled immediately. On this. Now, if I say I put a mark order for 902, then I definitely wouldn't get filled. If for some reason these 901s just dropped off, disappeared for a sec, and then you saw few shares at 902, then I would get filled. And then the second that this 901 came back, right, say this never changed. It was just 9 and then all become 902, and then the 901s came back, I would get filled. And then, but no price necessarily was actually executed. So probably what would have happened in that instance is I get filled at 901 because it's thinking that, it's filling me better than the price that I asked for, 902. But actually 902 was never printed. So that's what I've had happen in the past when using ask. Okay. So I use mark. So in order to protect yourself, what I do is just give it more room on the limit. Now, SYMC I think got bought, so they're not going to be one that you're going to really look up and look at the level 2. But if you looked at the TCO yesterday, the spread, it wasn't going to be an issue. I've only had it in rare. So what I do is I double the spread that I see, because I do want to get out. If for some reason news came out, for instance, and then this big event happened and it skipped, then you do have to do it manually. Okay, then you have to be, there should be a flatten button or something like that. Close out, close all, or something like that. Yeah. Okay, it doesn't really happen though. And in the times that it has happened, it came right back down. and I got filled within the limit. And so that I think it keeps me from losing whatever, having a much bigger loss than I anticipated. You can. The problem is that and the question is, some breakout traders anticipate the entry using level 2 and time in sales. Okay, and he's asking, do I do that? I generally don't. I just don't like the impact that it has on my mentality if I do that and it doesn't actually trigger. So, like we talked about on the uptick, in the uptick, because let's say, I'm trying to get filled on something like this, and I see it's like this, right? And maybe my entry is not supposed to actually be 905, but I see this, and I'll try to get it. When this doesn't break and I actually take a stop, it feels like I did something wrong. And I generally don't want to be putting myself in a position where I feel like I did something wrong, right? So, the market is filled with very, very intelligent people, very determined people. As you might expect, with money on the line, there's not a lot of room for error. So that's the only reason. But honestly, if that were the case on something like XOG, where my entry was supposed to be under 906 and it looked like this, there's a good chance I don't get filled. So that's the other thing about the uptick that I don't like, is that also pushes you to get in early. Otherwise, you might not get filled, right? Because I think, like I said in this example, right, it as soon as it broke 906, it already dropped to 903 by 904, right? So you can, and sometimes it is the only way that you're going to get filled. Sometimes on the breakouts too, like what you'll see on the breakouts sometimes is you'll see something like this. Ignore this chart and pretend it's maybe a bullish stock. It's basing on this. You'll see all these people stacked on the ask, and then you'll see the ask gets eaten away, right? This 303 becomes 290, then 250, and this number starts to become 40 and 30, and you'll see all this start to kind of get eaten away, and it's on something that's basing at the highs, really, really strong. You see all these people stacked on the ask, and you're seeing the ask just get eaten rapidly. It's about to break out. And so in that case, sometimes, again, you can anticipate. But like I said, the problem that I have with it is that if it ends up not actually triggering and stopping out, I feel like I did something that I probably wasn't supposed to do, entering early, right? So that's the only thing. But sometimes I acknowledge that it's the only way you're going to get it. Very good question. Good question, guys. Good questions. Any other questions? If price breaks, say triggers my stop, and I don't get filled within the limit, do I cancel or do I stick with it? At that point, the question is, does the reward to risk still make sense if I get filled late? So let's say it goes through your price, okay? In this example, we were saying, okay, what if this didn't trigger me and it already dropped to 29.35? Would I keep my order or take it off? I would take it off. Doesn't make sense anymore because I was targeting, right, 29.25. Reward to risk is going to be a problem now. So if I had bigger targets on this TCO, then maybe, because now I'm looking at more like a 30-cent stop. Okay, so if reward to risk still makes sense for the play, then it's okay. If it doesn't make sense anymore, and you're going to be having to use a bigger stop, and you're using small, and the targets are shrinking, then I would cancel. Okay, so but if the play still makes sense, if the reward to risk still makes sense, then you want to get filled, then you can try to get filled, and of course sometimes what you think is the target, it may exceed it, go beyond it, right? So but that's what you want to consider. Does the play still make sense if I get filled here? Okay, good question. All right, I know for some of you, probably a lot of this stuff you've already taken care of in your methodology and your process. It's already taken care of, but I want to make sure that we at least get everybody kind of up to speed. So if you're looking to trade for the rest of the week based on the ideas that we give, that you can kind of do it in the same way that we do it. On Thursday, we'll be doing a management talk, how, target picking, how to trail, what kind of management you should use. Okay. And in my opinion, it doesn't get much more advanced than that. It's just very, very tricky. And I don't know a single trader, no matter how much experience they have, that isn't constantly evaluating their management. Okay, so we'll look at that on Thursday, okay? All right, appreciate your attention, guys. I really think the questions just showed that you guys were really paying attention, really good. And so I appreciate that a lot. All right, so I'll give you guys a short break, and then we'll be back at it for the afternoon. Thanks a lot, guys.